Should I buy stocks during the coronavirus crisis? P.A.o. Money Channel. Investors have been on something of a bumpy ride since the onset of the pandemic. The latest dip in the road to recovery has come in the wake of high inflation across the globe and interest rate rises by central banks, especially the Fed in the US. So is now a bad time to buy shares, or are there opportunities to be had while others are fearful? Is now a good time to buy shares? It all depends on what you buy. While the future of some companies look positive, the same can't be said for all businesses. Take a company as famous as Facebook. The tech darling's owner Meta Platforms saw its stock market value drop by more than $230 billion, £169 billion, on February 3, 2022, in what was a record daily stock market fall for a U.S. firm. Meta's shares were down 26.4% after it announced daily active user numbers dropped for the first time in the company's 18-year history. It's important to do your research into each company you buy. Listed companies release their financial results, which can give you a picture of the health of the company. Also bear in mind that some sectors are fared better than others during the pandemic. Broadly speaking, technology companies have done well while travel firms have suffered. Remember, don't buy shares in a company just because someone said you should. Always do your own research first. Selecting and monitoring individual shares is time-consuming. You can buy investment funds or use a robo-advisor so that an expert can do all the hard work for you. If you're new to investing, you might want to read this first. Why has the stock market dropped? Around £72 billion was wiped off the value of the FTSE 100 on 26 November. The 3.6% fall is the worst one-day drop for the index since the onset of the pandemic and is due to fears of a new COVID variant. Travel restrictions have been brought in across the globe after the new strain, Omicron, was identified first in southern Africa. Airlines and other travel companies have been particularly badly hit. Is now a good time to invest? Reasons to feel hopeful about the stock market. Successful booster vaccination rollout could lead to an increase in movement, trade and spending. Closed industries reopen, think travel and entertainment. Takeovers will continue. New industries, technology, e-commerce and biotech have thrived during the pandemic and will continue to grow. Low interest rates will encourage people to spend or invest. Reasons to feel cautious about the stock market. Fears over new strains of the coronavirus, as we have seen with Delta and Omicron. Rising inflation will weigh heavily on businesses and individuals. Continued disruption to supply chains and global energy crisis. The continuing impact of Brexit. Central banks are unwinding pandemic support measures. Crashes can come out of the blue and their causes only become apparent with hindsight. But with the global economy opening up as the year progresses, there looks to be limited catalysts for a big crash. Find out more about how to invest during a recession. Will the stock market crash in 2021? A stock market crash is a sudden and significant drop in the value of stocks, and therefore their price. Some stock market speculators panic and sell their shares, fearing that if the price falls further, they could lose even more of the money they invested. No one can accurately predict whether or not the stock market is going to crash. All you can do is evaluate which factors will influence the stock market and your particular investments. The FTSE 100 share price, which measures the performance of the largest listed British companies, has been reaching fresh highs. But when stocks rise rapidly, there is always a danger that they could fall just as quickly. 8 things to consider before buying stocks. Here are 8 things to consider. 1. Volatility. Equities can be very volatile when there is uncertainty and could pull back a lot if new variants of COVID are discovered that evade the vaccines. 2. Context is everything. Just because something is not cheap, it does not make it unattractive. We are in for another decade of near zero interest rates, low growth and low, or no, inflation. In this environment, businesses in growing markets with access to cheap money tend to do well, and what you pay now for them may look cheap in 10 years' time. 3. Not all equities are the same. Some which look cheap now are in fact expensive and will probably fade away over the next few years. 4. Are you happy going against the crowd? Investing when people are fearful and carries a high amount of uncertainty is understandably daunting. Consider whether you believe we'll be in a better situation by the time you'll want the money. Things can always get worse before they get better. 5. Investing is for the long term. Remember, a loss is only a loss when you sell the investments. Your decision depends on how quickly you'd need the money and whether you understand that shares can fall as well as rise. Can you stomach losing money should markets continue to fall? 6. Inflation. With interest rates at a record low of 0.1%, a cash savings account won't help your money grow. When you allow for inflation, which measures the rising cost of living, you're almost guaranteed to be worse off. 7. Use a stocks and shares ISA. It's a good idea to hold your shares in an ISA to protect your earnings from dividend tax and capital gains tax. We explain, how are shares taxed? 8. Buy a pool of shares. If you would rather invest in a basket of shares rather than choosing them yourself, you could invest in a fund. Some funds simply track a stock market like the S&P 500, which is an index measuring the biggest companies in the United States. Why should you drip feed? If you are thinking what shares to buy now, remember it is almost impossible to time the market perfectly to make the most of your money. For example, invest when markets are rising. You may have missed the boat for the best returns. Invest when the market's falling, and they could fall a lot further still. Drip feeding your money in slowly, rather than investing it all in as one lump sum, removes this tricky decision. This not only encourages a good savings habit, it smooths the investment journey by buying more units when markets are lower, known as pound cost averaging. Find out more. Coronavirus, how to protect your investment portfolio. How do you get dividends? Dividends are what a company pays to shareholders when it makes a profit. The coronavirus pandemic has impacted on the cash position and growth of a number of businesses, which has impacted on the amount shareholders have received in dividends. Throughout 2020, the UK's biggest banks RBS, Barclays, Santander, HSBC, Lloyds, and Standard Chartered all suspended dividend payments and share buybacks. Dividend-paying stocks are often a popular choice to include in your investment portfolio. But remember, the dividends you earn might be subject to tax. Find out more. How are shares taxed? 4 tips to invest during volatile times. Here are our 4 golden rules when it comes to investing during a financial crisis. Stay calm. The pandemic has stirred up a lot of emotions, but stay rational about your investments. Consider your aims. Investing is personal. Your choices depend on your circumstances, objectives, needs, and risk tolerance. The key is diversification. Use your tax reliefs. You can invest tax-free with an ISA. With a pension, and also a lifetime ISA, you get an instant uplift as the government will usually add some extra cash whenever you pay in more money. Here is a pensions guide. Drip feed your money. If the markets go down further, you're buying at a cheaper level and it could help smooth out your returns, with the hope they recover and grow in the longer term. Find out more. Our Beginner's Guide to Investing and How to Retire Early. Best investments right now. Making the most of a buying opportunity often means looking for firms that are well placed for any potential structural shifts. Fintech and payments sector. Companies that help people work remotely or pay for goods or services are worth investigating. E-commerce. could surge given the fear factor of shopping in crowded malls and supermarkets. Renewable energy, consider sectors that will do well regardless of the pandemic. A rapid fall in the cost of building renewable energy projects has happened at the same time as a greater awareness of the climate crisis. This is a powerful trend that COVID-19 will be hard-pressed to derail. These assets provide reliable income streams, which are often backed by government subsidies. Read our guide to ethical investing. Online gaming, these businesses were among the most resistant to the market sell-off. Banks, depending on the duration of the coronavirus outbreak, the battle-hardened banks could be worth watching. Remember, banks have been through the 2008 financial crisis and may therefore fare better in an economic recovery than markets anticipate. Leisure sector, after months of isolation, people want to go out and spend. Restaurants and pubs with the strongest balance sheets might fare very well. Ideally, they will experience a surge in consumer spending at a time of reduced competition. And they will have the opportunity to pick up cheap distressed assets from rivals that went bust. Find out more, investment trends of 2021. Should you buy record cheap British stocks? One of the world's biggest investment banks, J.P. Morgan, has been telling investors to buy British stocks now while they are cheap. The investment firm had taken a bearish stance on British stocks since the EU referendum in June 2016. When compared to companies in the US and Europe, UK shares have underperformed since the Brexit vote. But JP Morgan has said there are a few things that could change the fortunes of British stocks. UK shares have strong dividends. Stock markets like the US and China are expected to struggle maintain their momentum going forward, paving the way for the UK to outperform. UK stocks have tended to rise in the months after an interest rate rise, which is expected to be on the cards soon. If you're looking to buy stocks, you might want to open an investment ISA. Find out why Fidelity has been given top marks in our independent ratings. Thanks for like, subscribe, and share. p.a.o. Money Channel.